Hello, I'm Chris Colby, and today I want to talk a little bit about tax. But don't tune off. Tax doesn't have to be boring. So what I want to talk to you a little bit about today is how a little bit of knowledge on the tax system can actually make a huge difference with your forward finances and your financial planning. So I've got a book recommendation that's really changed the way I look at tax, and I really want to share that with you. Stay tuned. So, the gentleman that wrote the book that I'm going to recommend is an American author, and he works very closely with Robert Kiyosaki, the author of the well-renowned book Rich Dad, Poor Dad. So the book is mainly discussing about the American tax system, so more federal taxes and state taxes, whereas in the UK here we just have essentially more the federal taxes, which is HMRC. We do also have some localised taxes such as council tax, but it's very different to the American system. However, the principles, particularly at the federal level of taxes, are the same across the whole planet. But anyway, without further ado, let me introduce the book. It's called Tax-Free Wealth, and it's by a chap called Tom Wheelwright. Really worth a look. I was certainly hooked on it when I was reading it. And the key thing that Tom does here is what he does is he gets you to look at the tax system in a different way. So most people would consider taxes as a way for the government to take money off you for public services that need to be carried out, which is absolutely fair enough. There are public services that do need carrying out, but I feel it's your duty to only pay the taxes that are due from you. So a lot of people sort of bury their hands when it comes to the tax system because they feel the tax system is very complicated, which, to be honest with you, it is pretty complicated. But personally, I don't like to bury my head in the sand. I like to try and learn something about it. So that's what I started doing a couple of months ago, and one of the things I've done is read this book. So Tom gets you to look at the tax system as the blueprint for what the government wants to be done. That's a different way of looking at it. What does he mean by that? So essentially, the government has a long list of things that they want to achieve, and they know that they can't do that all themselves. There's not enough public resources to be able to do that. So they go to the private sector and try to encourage them. And the best way to incentivize the private sector is through the tax system. So, and the good thing about the tax system, again, most people don't know, is to say if the tax book was, say, that big, only about that much is on how taxes to take money away from you, talking employment tax, etc. That much of the book is about how to get tax grants back off the government and tax incentives. So it's really interesting to think that, and it's an area that I'm starting to look much more to see what there are. I'll give you a couple of examples of what I mean by tax incentives. So one thing that's big on the government's agenda, and in the same consecutive governments across the whole globe, is this climate change and the environment. So for green energies, etc., there's quite a few tax breaks out there. So if, for example, a company is looking at putting up a wind farm, there's a number of tax incentives around that because it's something the government wants doing to lower the CO2 and emissions targets. But they can't do it all themselves. So the private sector will do that as an investment, and then the government will essentially pay them part of the investment as well. I don't know the exact figure off the top of my head, but I do know it's relatively generous. So that is one example of where you can get an incentive for doing something the government wants. Another thing that I personally believe in very much is that we're always hearing how there is a shortage of housing in the UK. So because there is a shortage of housing and the government are not able to build enough houses, and all the targets, consecutive governments, doesn't matter which political party is in, they never ever really meet their targets for houses. They have to look to the private sector to help. And again, how do they incentivize the private sector to do it? Through the tax system. So if you think about it as a property developer or a property investor, you are able to claim a lot of tax deductible expenses such as refurb, development costs, etc. But particularly if you hold property, one key thing is you're allowed to depreciate that property as an asset. So depreciation, I'm not going to go into too much in this video, but if you don't know what it is, it's worth knowing because it's such a fantastic tax break that can be used, particularly with a business, a limited company. So if I was to buy a car through my business, there is a recognition that the value of that car, of that asset, accounting terms and assets, if you look at the personal finance, whether you'd call it an asset is debatable, but in accounting terms, it's an asset. That asset is going to go down in value. So what the government enables you to do is to basically deduct a little part of that asset and offset it against tax, recognizing it is going down in value. Now, the same can be done with property. Now, property, yes, there is wear and tear on it, so it does need maintaining. You know, every sort of 10 years or so, you might need to change the kitchen if you had multiple tenants and things like that. But that's tax deductible expense. But because of that happening on the property, they enable you to depreciate it. But what does property do over time? It always goes up. So you get a tax break for it going down in value when actually it is going up in value. Now, this is fantastic, and these are the same rules to absolutely everybody. So it's not just rules for a select few. So if you're thinking that sounds outrageous, the same rules apply to you. So why not look at ways that you can, you can use those rules to your advantage? And again, you're helping the government out because the government want good quality houses being built, being redeveloped, etc. So it's a win-win for everybody. It means also that tenants have nice properties to move into. I know, for example, in the South Wales, in the valleys, there's a younger generation of tenant. They're screaming out for nice houses. There's a lot of houses there. They're sort of still decorated in the same way they were in the 70s and 80s. And they don't want to move from those areas. But what they want is they want them redeveloping. So that's an area you're helping out and you're helping regenerate a community, and you're getting an incentive from the government to do it. And the other key thing that Tom talks about is planning and get a strategy for tax. So everybody, for everybody, no matter how they earn their money, there is always a way they can lower their taxes. So for example, if you are in paid employment, you, unfortunately, I hate to say it, you're the people that are getting hammered the most in tax. Just because of the way the PAYE system is set up, you get taxed first immediately on whatever you get paid. It's not great. I didn't particularly like that way, which is why I changed my jobs and became an investor. But I hate to say it, but you are being hammered the most in tax. But there are still ways that you can lower that tax. So things like employee share schemes. I did a couple of those that were actually, I did very well out of them, but I was also able to get, the contributions came out of my payslip before tax was applied. So I essentially got an extra 20% on that anyway. So there are ways, and the other key thing that most people don't use is use your full pension allowance. You're allowed to invest £40,000 per individual into your pension. So if you're contributing personally, you can only match what you've earned. But if you work for a business, if you have your own business, your business can pay your pension. That can build up. And that could be the difference between you retiring at 55 and retiring at 68 or 70. By the time I get there, who knows what age it will be before we can retire. But that could be it could be a difference between that. But if you have a business, you can set up what's known as a SAS pension, which is a small self-administered scheme, and that means you can actually loan that money to your businesses and do investments directly. So you can essentially use your pension as your own bank account if you are a business owner. So that's gives you fantastic tax breaks, and then there's a whole load of other things that you can do about just recording your expenses correctly, etc. And then just looking up on various rules around if you're using your home for work, etc. So it's really, really worth trying to understand a little bit more about the tax law. But going back to Tom's book here, he has spent probably about 30 years as a tax planning professional, and he really does cover pretty much everything here. So there are 24 chapters. Like for example here, chapter 18 is called, chapter 17 is plan to retire rich, not poor. Chapter 18, business can be your best tax shelter. He goes on to talk about chapter 19, the magic of real estate. And he also says about not fearing an audit. So he just talks about there that, your tax strategy is very good, but you need to keep the good paperwork, and an audit is actually a really, really good thing because it tells you you're doing the right thing. Don't fear it. So it's, how many pages is it? It's about 270 odd pages. I was hooked on it. I read it all virtually. I read it inside of a week. Because unfortunately, as much as I try to, I don't have the luxury of reading for sort of 2 hours a day. But I got through it very quickly, and I cannot recommend it enough. But as I said at the beginning, knowledge is power. So have a read of this. Let me know what you think. Let me know what kind of things that you're doing to save tax. I'd be really, really, really interested. Again, I'm not trying to sort of say that I think tax is a dreadful thing and you shouldn't pay any form of tax at all. I think everyone should pay a little bit of tax, but you shouldn't pay more than you need to. When it gets to the stage where half of what you're earning and what you're working gets paid on taxes, that never sits right with me. Again, I don't want to open up a political argument around there, but it's the whole sort of principle of, if I turn up to work and I don't actually start earning any money until after lunchtime, it just doesn't sit right with me. Anyway, please let me know your thoughts below. If you want to know any more information about this book, get in touch with me. As I say, I don't receive any kickback from this. I just want to let you know because it's really changed the way that I have looked on taxes. If you'd like to understand a little bit more about investing, particularly if you might want to know a little bit more about how to calculate return on investment for buy-to-lets, make sure you click over here. If you want to subscribe to our channel, in fact, no, please do subscribe to my channel. Please click here. Make sure you hit the like button. I'm not going to say smash the like button, but hit the like button down there. Comment below, and I'll speak to you soon. Thanks for watching.